Hello, welcome to this week's webinar. If you're watching the recorded version of this, it was held live on Wednesday, September the 21st at 12:30 in the afternoon. So this is one that I do every week with AUD, and it's the market outlook. It's a quick look, really, at what's the levels to look out for in the days ahead, trends in FX, indices, and commodities, just to see maybe where there could be some opportunities out there. So for people who are here live, if you have any questions, you can type them in. You're in the webinar. I'll just leave that risk warning up for a few more seconds for people to digest. I think it's a bit of an odd afternoon today because later on this evening, 7 o'clock UK time, we've got the latest from the US Federal Reserve, the US Central Bank, as to whether or not they're going to raise rates. I think, just doing some reading this morning, there's a less than 20% expectation that they'll change interest rates this evening in the US, but it could still be volatile, as I'm sure anybody who's watched these in the past will know, as they give maybe some hints, or the market tries to second guess when rates come. So if there's no change today, it does ramp up expectations for a change in December, but at the moment the market is expecting no change. So we could see, I think, in stock markets and currencies, something of a quiet afternoon until we get that rate decision out of the way this evening. But if you're in front of a screen at 7 o'clock this evening, I think if you watch things like that with Dow, pound against the dollar, euro dollar, we could well see some odd moves. But let's see what happens. But without further ado, let's get into the charts. I'm going to do this alphabetically, I think. We'll start off looking at currencies as usual, and I think there's some interesting things going on. I'll start off with the Australian dollar, US dollar. We were looking at this. We've looked at this a few times over recent weeks, and just to sort of remind ourselves what we've been looking at, we're at something of I think an important junction for the Aussie dollar, US dollar cross. If we look at, I think this is the line I've looked at in the past, the trend from 2013 from memory, which looks, something like that. So this is on a weekly chart, and we've seen the Aussie dollar rally this year has brought it back to this trend line. So this 7,800 level is a big level for the Aussie. I think, if we saw in the weeks ahead, it's a couple of hundred points away from it at the moment, but if we saw a sustained push through 7,800 on the Aussie dollar, it does look like the start of a significant reversal in trends. So it's an interesting one, I think, for the longer term people to keep an eye on. But short term, I've been saying that the bigger level for sort of shorter term traders is this 7,400 mark. I think I've banged on about this a few times in recent weeks, and I did actually follow my own advice last week, end of last week, and bought it. Really, we were talking about looking for strength once again off this level. It's a pretty clear level that we're looking at here. So it's held the market up. There we go, 74.08 are the lows from June. And it has provided good support, so I ended up buying just below 7,500 after it bounced with a stop the other side of 7,400, and looking for a rally back up to here initially, and maybe up to that 7,800 level. So I think even though this trend from December, end of last year, has slackened, there does, at the moment at least, still to be a bit of a bias to be a buyer on dips for the Aussie dollar. So this is a daily chart that we're looking at now. So I think it's interesting if we do see weakness below 7,500, looking for that 7,400 level to hold. But bear in mind, we are still technically in this 3-year plus downtrend for the Australian dollar, US dollar. So it's going to be an interesting few weeks ahead. I think if we do crack these highs from earlier in the year, it does look like the start of a bigger reversal. Let's see what happens. So that was an example of the Aussie holding a big level. And I'm a big fan of these big levels, previous highs, previous lows, because it gives us a logical place to put our stop loss beyond. And something that's sort of bounced off a big level just this morning is, or big-ish level just this morning, is euro dollar. I think it's early days, and I wouldn't necessarily open up any new trades this afternoon until this Fed thing comes out of the way, because just the, the volatility over that could end up knocking your stops out, and the market goes back to where it was before. We'll look at an example of that in a second. But euro dollar, US dollar, I'm bullish on the euro dollar. I think that the bias, is up, and going back to last year, I think what we saw for much of last year, so there was that massive decline. This is a weekly chart now. We saw that massive decline all the way through 2014. Then 2015, we did see, I think, a base forming. That trend ran out of steam. The market went sideways, and I think the bias is still up for me on the euro against the dollar. But the level, I think I put it on Twitter this morning, the level I was talking about, these lows from earlier in the month, I think it was, you can see these lows here, and the market did spike down. I think it's 1120-ish, it's 1143 now, so about 20 points above that level. But the market did spike down, I think, and it may have just briefly nudged through those lows. There we go. These are the levels I was looking at, and you see it did a good job at the beginning of the month, did an okay job end of last week, or was it middle of last week? Yeah, and that was, we saw a good, half decent rally off this old support, and that's really the level I'm looking at. So for me, again, I have to wait and see how it goes this evening. But I think for me, while we're above that sort of level, look at that, almost textbook this morning. While we're above that sort of level, it does look like an interesting buying opportunity, I think, in euro dollar. Maybe looking, I don't know, for a run back up to maybe these sort of levels up here, which is only from a week and a half ago. So I think it's interesting to see how this sort of 120 level holds up on the euro. But let's see what happens once this Fed decision is out of the way this evening. And I was talking about volatility. We saw the statement from the Bank of Japan overnight: no change to rates, but they're going to try and keep yields low, I think. Look at the volatility. This is dollar yen. And talking about a market being all over the place and just ending up where it started. So dollar yen on a 10-minute chart went from 101 to 102.80, so nearly a 200-point move in the space of less than an hour, and then came all the way back again. I think that shows how it can be quite difficult to trade over these major central bank announcements, even if what they say is what the market was expecting in the first place. So it can be a bit of an odd time. Just while we're on dollar yen, let's look at the chart. I think my view hasn't really changed that much from last week. If we go to the dailies, we've had, as I've been mentioning a bit over recent months, we've got that downtrend, in dollar yen that looks something like that ish. I think it needs to break 108 to really shake off this downtrend, but sort of 99 to 100 has done a good job of stopping any weakness throughout the summer. So I think it's let's see what happens, because I think a week ago we were trading about here, and it was sort of in no man's land really. But I think if you've got to push down to 100, then a bit of strength, and maybe it's a buying opportunity, a rally up to here, maybe it's a selling opportunity. At the moment, it's a bit too much in the middle for me, so I don't really think the opportunity is there. I think euro dollar, for example, looks a lot more interesting than the one we just looked at. Pound against the dollar is an interesting one. We were looking at that last week, and it had really run out of momentum over the past. What's this we're looking at as the daily charts? So it had run out of momentum, but we're coming back. We're not a million miles away. I'm maybe a bit surprised that it has come back down here to these sort of post-Brexit lows. So about 128, let's say, were the lows. Where is it now? 129.88. So it's 190 points above that low. So for me, it's drifted off quite a bit. It's come off almost 500 points or so since those highs in August. So for me, I think there's the potential. It's interesting because I would expect the strength to come back in for pound against the dollar at these levels. We've seen a couple of tests down here, and it hasn't really stayed down here very long, particularly that last turnaround around about 129. We saw quite a sharp reversal of that, and quite a strong rally over the next couple of weeks. So I think it's an interesting one down here, pound against dollar, to see if we see the trend coming back in. Maybe people who thought they'd missed out on buying pounds cheap last time round, maybe we'll see the same thing panning out. Of course, if we saw a sustained move through 128, I think we could well see panic. We could, because I think we've seen the lows of pound against the dollar, famous last words. There are still plenty of people who think, there's a lot more pressure to come on the pound following the referendum vote. But I think it's going to be interesting to see how it performs down at these levels. So personally, I'd be looking for a bounce, but probably not quite yet. I think it's still weak. If we had let's have a quick look on the hourly charts. Yesterday, I mean, it's so far today, it's held above yesterday's lows at 129.50. So I think for the short-term traders, the level to watch going into tonight is that 129.50 low. But only yesterday it made a new low for the down move. So even though I think we'll see strength coming back in, I wouldn't necessarily be in a hurry to buy just yet. But it's definitely interesting down here, all because we're back down. Although I hate to keep banging on about the referendum, we are back down to those or near those post-referendum lows. So I think it's an interesting one to keep an eye on. But I think for me, again, still euro dollar is probably the more immediate one. And to take the dollar out of it altogether, let's have a quick look at euro sterling. Again, I think we've been looking at this over the last couple of weeks and seeing this reversal building in euro sterling. Again, how important these big levels were, sort of 83, 82.50 to 83 in July, came back down to it August, and we've seen a recovery off that. I must admit, I've missed that, and that was one I was watching for ages. I don't know why I managed to miss that. But if we have a look on maybe 30-minute charts, I think it's cooled off a little bit over just today, but it was only yesterday that this recovery trend in euro sterling hit a fresh high for this particular trend over the last couple of weeks or so. So for me, my bias, if I could draw my line right, would still to be a buyer of euro sterling on any weakness from where we are now. And I think maybe the obvious first level to look at is, there we go. I really do need to get a decent mouse because my mouse is far too shaky. I think for me the obvious level, depending on how aggressive you wanted your stop loss, you could argue there's a case of being a buyer now at 85.82 with a stop loss underneath the dip from yesterday afternoon at 85.60. Perhaps the more sensible stop loss is to give it a bit more breathing room and put a stop loss underneath the lows from maybe the beginning of the week. But for me, my bias would still be to be a buyer of euro sterling. And I've talked about this a bit. I think I've said in the past, I'm not a massive fan of oscillators, of having a million different indicators on your charts, because I think you can end up not seeing the wood for the trees. But we're seeing this again. I talked about this idea of divergence. This is an RSI down here where the market hits a low, RSI hits a low, the market moves a little bit lower, but the RSI is making higher lows. So it can be a suggestion that maybe the trend you're following is out of steam. So I think euro sterling, it also takes the dollar out of the equation, is an interesting one down here, because for me, that trend over for this month, it is still up. Let's have a look on an hourly chart, similar sort of picture on an hourly chart. That trend is still up, and we do have these good pockets of support, and it was only yesterday or the day before that it hit fresh highs for that uptrend. So I'd still be biased for euro sterling going up, unless we break these lows from here. Then it does start to look like that trend is running out of steam. But I think that's an interesting one to keep an eye on. One last one. We started looking at this because someone mentioned it a few weeks ago, and it had a great trend. New Zealand dollar, US dollar. So let me have a look. Here we go. New Zealand dollar, US dollar. I've missed the boat on that, I think. But if you have a look on the daily, so someone flagged this up. This fantastic trend we've seen, and it has actually, unlike the Australian dollar, US dollar, the New Zealand dollar has broken the downtrend it had been in. So we have had for most of this year, or all of this year, this solid uptrend in the New Zealand dollar. And if we drew, let me just plonk my lines on. If we drew, there's our trend, euro dollar, and that trend has accelerated. And if we come in on the hourlies, I think the opportunity was to be a buyer below 7,300, and there was an opportunity yesterday. But I think for me, again, it's all about a question of where do you set your stop. You know, we had the slide from the top of that trend high, and the market gave up a good couple of 100 points. But you can see how there'd be an appetite to be a buyer in the 72.30 to 72.50 area. So for me, I maybe wouldn't be a buyer here, but if we saw a dip back down into this sort of zone, having a stop the other side of these lows. But I think, you know, on the New Zealand dollar, I don't think that major trend we've been looking at on the daily charts, you know, is anywhere near over just yet. And hopefully, I think as we all know, if the trend's up, we want to look for buying opportunities. Let's take a look at crude oil. I think it's been difficult, crude oil. We'll have a look at US crude. I think I've got US crude set up here. And we'll have a look at the Brent crude as well, but I think it's all pretty much of a muchness. So let's have a look at Brent crude. It's the November contract. I think it's been a bit scrappy. We had this, I think, when talking about it last week, you know, clearly we'd had the recovery from the $26 a barrel area. Then it lost steam, then it moved up, and it was just sort of hanging around in the middle. And I do remember saying last week, well, I think it's more up than down from here. But probably if I'd have traded it, there's a chance I would have been stopped out on that move yesterday through those lows. I don't suppose it poked that much through the lows, but I think it just looks a bit choppy, I think, crude oil at the moment, doesn't it? But I think the bias is still, you know, for me anyway, probably more up than down. That was the move yesterday. You could, and it really was a bit of a sort of fake out, wasn't it? We had the 45.50 level had underpinned from a couple of days before, and the market spiked a little bit lower and then has bounced back more than 100 points, more than $1. So for me, if someone said, right, you've got to trade it, I'd want to be a buyer. Maybe an aggressive stop is just under yesterday's low, and a wider stop is probably not much further away than that, is it? I think, because this has propped the market up pretty well. But if you really wanted to buy crude, that's probably the place to put a stop. But you could argue the trend is still down. For now, this little bit of trend is still down, and it's struggled with these highs in the sort of 47 area over the last week or so. So it wouldn't surprise me if we came back to it in a week and it was still trading at $46, $47. Famous last words. So I think it's a harder one to call at the moment. Gold has been, again, a bit of an odd one, but I think everything that we looked at last week on the price of gold is still valid today. You know, I still think I'd still be bullish on gold. You know, look at the trend for this year. The trend for this year has been up on the price of gold. So if we were to plonk our lines in, you know, it looks something like that. And that trend, for me, it's still just, oh, actually, it is just about up. It touched the trend line today. But for me, I think, as I've said over the last few weeks, 1300 is the big level on gold. It's been pretty dull for a couple of months, but the bias is still up. So for me, you know, if it did drift back down to that 1300 level, it still looks to be, I think, a buying opportunity. We've seen it over the last few days. You know, it came into it quite hard, sort of 1305, 1306, but the market has rallied. So I think the bias for gold still up. You could argue the move today, actually, you know, finally breaks off this sort of corrective downtrend it'd been in for a couple of weeks. So for me, my objective for gold would be for a run back up to here, sort of 1380, 1370, 1380, assuming the 1300 level holds, assuming those lows hold. And I think it's an important support, and I think it's also, the 1300 is also something of a, you know, a psychological level. 1305 are the lows here, but let's say 1300 for the sake of argument. I think it's an important one. What else? Stock markets. Stock markets. It's been odd. If you let's look at the Dow. It's been a really, you know, we had that. Was it a week last Friday, wasn't it? We had that massive sell-off that you can see on the red candle here. That massive plunge. Then a week last Monday, we had the massive rally. Well, didn't claw back all of the move, all of the weakness from the end of the week before. And then it's almost been as if it's been in something of it's like a corkscrew pattern, the Dow. Let me show you what I mean. Here we go. So that was the big sell-off on the Friday, when it was 18,250 was the big level that had held the markets up through the summer. There we go. So that was the markets. This summer trading in stock market indices in the US have been pretty quiet again after the post-referendum rally. 18,250 had held the market up. That went on that Friday, a week last Friday, and the market just collapsed. Um, then we had, you can see just red, 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 red. So every hour the market was just falling. Then on the Monday, blue, 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 blue. Every hour the market's just going up. And since then, it is just like a coiled spring, isn't it? Just doing nothing. I think for short term, for really short term traders who are day trading it, I think there have been opportunities. I think I've mentioned in the past, I know I have, how much a fan I am of the sort of previous day's high and low. And that has worked. That's worked pretty well, I think, over the last couple of days. We had a bit of a spiky move. Was that yesterday? Was it the 20? Oh, actually, the early hours this morning on that dollar yen thing, wasn't it? Spiky move back towards 18,100. 18,100 has been a big level for the Dow, but also on the upside, sort of 18,250, it can't get through. So I think again, maybe with this Fed decision tonight, get a bit more back to normal and have a bit more of an idea about direction. But I think it's a difficult one to call after that slide. I would tend to think there's maybe a bit more downside to come. But let's see in the short term. But I think we'll go back up to have a go at those highs again. But I think when it's just trading like this, in just these really tightening ranges compared to what it's done over a couple of days, I think it's a difficult one to call when it comes to direction, the Dow. But let's see where we are after tonight. I don't know. I really don't know. I think the big level to watch is 17,900 on the downside. I think in out of hours trading the other week, that was the level it traded as low as. So I think there's a lot of scope. Even if it dropped 200 points from here, we'd only be down to this sort of area. So I think these are the lows to watch. I think if we saw these lows go, we could see a much bigger sell-off, much sharper sell-off. But at the moment, maybe over the next week, maybe we just have this chop. Let's see. But I think if there's any drastic chart breaks, I'll always try and put them on my Twitter feed. And it's similar for the other markets. Obviously, the FTSE. I think the FTSE last week, I wasn't convinced myself, but I think I was saying if there's a level to watch, if there's a level you really want to be a buyer, it was ahead of 6,600s. And I think over the last couple of weeks, we have seen the FTSE hold that level. Let's go on to the dailies and we'll see it clearer. There we go. So the FTSE, clearly followed the US markets lower, and then middle of last week was trading here. But clearly that this 6,600 level has been an important one on the FTSE. It's not so useful to us now because it's 250 points away from where we are. But it's interesting, but again with the FTSE, we're getting up to levels ahead of 7,000 where the market struggled in the past. So if the Dow carries on going nowhere, I really can't see the FTSE carving its own way through 7,000 somehow. But saying that, in the short term it's still strong. Clearly, we can see that the blue candles there, and this is on the daily chart, just happily marching higher. So if you were looking at the trend, clearly this is the trend we'd be following off those lows ahead of 6,600, and it looks something like that. There we go. So if we got a pull back to 6,800, 6,780, 6,800, it looks like a buying opportunity. So maybe we'll see it squeeze a little bit higher, but I can't see, unless US markets suddenly decide to wake up, the market bothering 7,000 anytime soon. But for now, at least, that trend on the FTSE is definitely still up. So let's see. And a final one is the DAX, the German 30. So let's just have a quick look at the dailies. There we go. So we had the DAX, of course, like the Dow, broke the big levels, and like the FTSE, has recovered over the last few days. If you look on the hourlies, I'm sure we'll see, there we go, a similar sort of trend to the FTSE. So 10,500 or 10,560 is an obvious one to watch on the DAX. So after US markets plunged on that Friday, clearly European markets followed them lower. On the Monday we saw the bounce back, but the DAX ran out of steam at 10,560. So I think that's maybe in the short term at least, it's maybe the interesting one to watch. If you were really bearish on stock markets, the DAX is trading at 10,505 now. the trade to do would be to go short 10,505 with a stop above 10,560. Let's see what happens, he said, being very non-committal. But I think 10,560 is a big level, because it was the post massive sell-off resistance on the way back up. So I think perhaps in the short term, for a change, the DAX is maybe the more interesting one to watch. But as I say, we have this thing this evening, the Fed's latest pronouncements on interest rates and the economy. So let's see how markets perform over that. But I think we could well see something of a quiet afternoon. Actually, adding weight to the facts, if you wanted to go short the DAX, it is very overbought, relatively speaking, I suppose, on the RSI. When we were this overbought was back here when it did hit that 10,560 mark. So, and it's not done too. I'm not normally a massive fan of overbought, oversold on the RSI, but it's not done a terrible job over the last couple of weeks or so. Of sort of looking at these turning points. I think it's maybe an interesting one to watch. But for me, so the DAX definitely. I think I'll keep an eye on that this afternoon and see if anything happens. But as we saw earlier, Euro sterling, based off that level, off that 1,120 level that has been tested this morning. Again, I wouldn't necessarily do anything straight away this afternoon because I think we'll just be treading water until this decision comes out. But I think that's maybe, for me, maybe an interesting currency to watch. And as usual, the Aussie dollar, New Zealand dollar, because of their trends, and also for the casual observer, I think the pound, because that post Brexit level, this is on a weekly chart, maybe could be up for being tested again. And I think it'd be quite a shock. I think we had clearly the massive volatility over the night of the referendum. And I think everyone sort of calmed down a bit about their pound panics since then, and have sort of accepted that maybe 130, 132 is the range. I know I have. But I think if it does break those lows, it's going to be headline news, and I think there'll be quite a bit of momentum behind it. But for now, I'd be expecting it to bounce. So famous last words. We'll see what happens. I think there's a bit on there, hopefully, to keep everybody interested. But like I say, let's see what happens tonight at 7 o'clock. For now, we'll wrap things up. If you have any questions, though, afterwards, drop me an email. You can drop me an email, david@tradeafter.com. You can follow me on Twitter. If any sort of big levels go on charts that look interesting, I do try and put them on Twitter. My Twitter name is @JonesTheMarkets. I'll do this all again next week with Aondo, and next Tuesday night, 7:30 Tuesday night, I'm doing our sort of regular twice a month webinar on social trading. That runs for half an hour as well, so I'll tweet out the links to that. But if you go to the Aondo website or my website, you'll find links to that. But I think plenty to keep us interested. So I think maybe a quiet afternoon, get this decision out of the way, and then markets might get a bit more interesting after that. But thanks for coming along today. Like I say, we'll do it all again, same time, same place next week. I hope your trading goes well, and any questions, let me know. Thanks.